We are back at it again here with another video with Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. All I ask for in return is for you guys to smash that like button. So here we are with the SPY. We're going to talk about some key levels here. The stock continues to go higher, right? The overall market, the stock, the SPY, SPY continues to push up higher. And a lot of people are asking themselves, have we bottomed way back here on July 14th? Because all we've done is go up since then. And we've been rallying this whole entire week, especially after earnings, GDP reports. We got a lot to discuss in today's video. But today the SPY, as it continued to push up higher over at our Discord, our SPY bot sent out a bull indicator at 9:45 a.m. and another at 12:45 p.m. And both times call options went up 100% plus at their highest points of possibility. If you want to receive this edge and clarity over the charts, check out the link down below in the description to the 42 vision indicator, getting connected to our bots, and becoming part of a growing community of investors using these resources to maximize within the volatility in either direction by receiving this clarity and edge over the charts. So here we are with the SPY pushing up higher. We have some key levels to talk about, but before we break it all down, I want to share with you guys the home run opportunity our Tesla bot sent out over at the Discord. So the home run of the day was spectacular and beyond expectations. And if you guys want to know about these stocks early on in the pre-market or receive this edge and clarity over the charts with our 42 vision indicators and getting connected to our bots, check out the link down below in the description to the Discord and our 42 vision indicator. We look forward to having you join us, and we strive for opportunities like these every single day, and you'll become part of a growing community of investors all looking to learn and grow together. So our home run of the day was from our Tesla bot, sent out a bull indicator at 9:45 a.m. and from that moment forward, there was a continuation of strength, and Tesla calls went up 1,000% plus within the day, guys. If you guys want to receive this edge and clarity over the charts, once again, check out the link down below in the description to our 42 vision indicator. We look forward to having you join us, and let's jump into these charts. So here we are with the SPY and the S&P 500 index, and I want you guys to understand some things that we're going to break down in today's video, because the stock market has been going higher and everyone's looking for this to turn out to be a fake out. So we're going to look at some things together here. I'm going to pull up the bull and bear indicators, which you can now gain access to as well. The link is down below in the description to the 42 vision indicator, getting connected to our bots, and becoming part of a growing community of investors all looking to learn and grow together and using these resources to maximize within the volatility by receiving this clarity and edge over the charts. So the SPY has had multiple bull and bear indicators in the last several days, but bull indicators have dominated, right? Going back to several weeks from now, right? But the last bull indicator that just popped up was on the 26th at 391, and we're up at 411. Then we also had a big leg up here from 382 to 399, consolidation, and then it took off. But how did it start, right? So I'm going to pull up here on the screen. You're going to see it. Two articles that I've talked about when this all started to rally and how we ended up from here all the way up to here. And the one thing that actually created this drop here before we pull it up is Apple, right? Apple talked about how they're going to cut on some spending, and that actually shocked the markets. Yet they actually went ahead and killed it with earnings, right? Things were actually better than expected, and now people are even considering Apple to be a consumer staple, even though it's not just yet. But a lot of people are still looking at it as a very valuable item. Almost like any time period, anyone is still going to see value in purchasing Apple products. So these articles are the ones that actually started getting things moving, and the first one is Fed Waller, right? Coming out and stating that the markets were getting ahead of itself, and 0.75 is what he saw. So he kind of actually started getting the markets in that mode to believe that, right? Or at least speculate on that, and things started pushing up. And then the next day, consumer sentiment blew it off the charts for the first time, coming in better than expected, and things started moving since then. And as you could see here in the charts, those were the two dates back to back. Apple surprised the markets with its statements. Things continued upwards, consolidation, and this earnings week and all the data coming out has led to a point where the markets right now, if we read this article together, are pricing in something, and this is how the markets is, right? It's forward looking. So when things were falling here, it was pricing in the possibility of a recession, bad GDP numbers, all the way towards a very high rate hike. Now it's pricing in completely something different, thinking way ahead. And this is where I believe, like I always state, it's not financial advice. Volatility will continue. It's here in the markets. And within this volatility, I'm going to continue to use 42 Vision to maximize within the opportunities. And there's many members within the community equipped with these resources to maximize daily, right? Now, nothing's guaranteed, but within this volatility, having a clear chart and having an edge makes all the difference. So here we are with this article stating the S&P 500 posts its best month since November of 2020, almost 2 years since actually having its best month over the whole entire course of 30 days, if you want to call it 30 days or 4 weeks or 1 month, all equal the same, but its best actual performance since November 2020. Now, this is the one thing in this article that stood out to me, and this is where it gets very, very interesting. So Bank of America says it's a bear market rally. Everything that we've seen here in the last several weeks and all these days since way down here at 371. And I stated if we found support at 372, we could try to push back up. We needed a break above 393. You could see how things actually found support there again and then did another leg up since. And we needed a break above 4. And if we could break above 420, things could get even stronger. So this is getting at a very pivotal point of either exhaustion or further strength, right? We've talked about this in our videos way back, days ago, weeks ago, right? So they're stating that all of this is a bear market rally. And if you come back here to 42 Vision, it's been under a bear indicator since January 24th on the weekly chart. We hit a dip area 2 times and we're trying to run back up. And right now, so far, we have 2 red with green borders back to back. And we have had 4 of them back to back before, going right back down. So nothing's confirmed just yet. If this is actually a bear market rally or a real bull run, we'll have to see. But if things reject, Bank of America might be right with their statements, especially since we're still under a bear indicator here on the 1 week. And if you put the 1 day, yes, it got a bull indicator, but we just hit extreme strength. This is what 42 Vision allows us to see, right? The dips and the rips from white with red borders, full transitions into green. And then once we hit the rip area, eventually we get the dips again, right? We go right back down, get that bear indicator, full transition, back towards those dip areas of white with red borders and extreme exhaustion. So that's what the bull and bear indicators are there to add extra layers of confirmation, and the transitions within 42 Vision allow us to see the dips from the rips. And right now we are in a rip area on the 1 day. We have done a complete transition and eventually it could hit an exhaustion point and transition right back down. But right now we're under a bull indicator, full strength here, and Bank of America, based off what they're stating, I could see why they say that, especially since we're still under a bear indicator and no bull indicator has popped up, because the last 2 times bull indicators popped up, or even the last 3 times, it actually has lasted for several weeks to years afterwards, right? So right now we're still in the midst of a bear market, and what this article states that is very interesting and stands out the most is the recession is already priced in, right? That whole theory of what's going on. So the market has come to terms with the fact that they definitely are in a slowdown, right? Everything's in a slowdown, and maybe we are in a recession. Okay, that's one thing. So now it's starting to move on the focus on recovering from a recession that hasn't even been officially declared. So this is what they stated. This is what's written in the article, and this is what really stands out, that goes ahead and shows how the markets turn out to be forward looking after it hasn't even been declared, and now it's pricing in hopefully that's in the past and how we can get out of it. But this bear market is in a still position of gray area, and if you read more and more about articles, bearish articles, bullish articles, everyone's pointing back to the point that there could be another aggressive rate hike or something that could surprise the markets within this process. And we're still in the process of quantitative tightening. That is super important to keep in mind. Now, the 10-year treasury, though, has actually spiked here all the way to 3.4 in the last several days and weeks, and now it's pulled right back down to 2.6, broke through a support level, but it has hit a dip area, and others are also stating that we can eventually have oil surprise the markets with a crazy spike back above $100 and going back towards 120 or even to new highs, especially if a lot of people are betting on oil companies. That is something to keep in mind. And the VIX is at a low here that we have not seen in a while, which is around the 20s and low 20s, and eventually things can spike up again. So this is all speculation right now, and these are points where things could get to an exhaustion point, especially if you just look at the way 42 Vision works. We hit a rip area here. We're going through the transitions, extra confirmation with the bear indicator, red bars, and eventually we'll hit a white bar of extreme weakness, right? Same thing here with this other chart. We did hit a dip area here, consolidation, trying to come back up. That's US oil. We'll see what happens or if it continues going lower. And then right here, we have the 10-year treasury, full transition from rip area, extra layer of confirmation with that bear indicator, and we just hit our first dip area. So everything is looking very interesting while the market has hit a rip area from the dip area, extra layer of confirmation with that bull indicator, and it's reaching a very pivotal resistance level based off the chart. Did a triple bottom here, found support at 372, 371, has taken off. We're back above 400. Could we stay here? Could the rally continue? That's what's going to be interesting. I'm going to continue to watch 42 Vision very carefully and try to maximize within the volatility. And on that 1 week, I'm going to be watching very carefully how this continues to transition. If we hit our first dark green bar that we have not seen in a while, we always get rejected at red with green borders. And if there's a possible bull indicator that could pop up in the transitions back up to cancel out that bear indicator since January 24th. As always, guys, thank you guys so much for watching, and let's make some money.